Hey folks, welcome to the Rate Update with Dan Frio. Of course, I'm Dan Frio. Today is April 12th, 2021. What's going on with mortgage rates? It wasn't a good day, and I think the main reason is, and I'll go over that when you come back. Don't go away. Well, it was funny because last week we got some numbers in that was very inflationary, and the markets didn't do anything. And you notice and you can go back to my videos, I was like, inflation is, waged havoc on everything last month, the month before, and then all of a sudden numbers came out last week and it was like, okay, they're irrelevant. Well, they're starting to become relevant again. So let me explain what I'm talking about here. So we're going to go over today what's going on with mortgage rates, why, and then a little short-term forecast of what I'm expecting the next week or so. So here's where we're at. Mortgage-backed securities up 28. What does that mean, people? Everybody knows that when you watch the channel, down is bad. Down is real bad. When prices are down, rates are up. Mortgage rates are up. When MBS prices are up, rates are down. This is a substantial move. Not huge. I've seen a lot worse, but I don't like the direction of this. And basically, there was no economic data out today other than the 3-year and the 7-year Treasury auction. And I'll go over that right here. I'm sorry, 3-year and the 10-year Treasury auction. And they didn't go so bad. But tomorrow is where some of the news starts to flow in, and the rest of the week could be like, uh-oh. Okay, so tomorrow we're going to see inflation numbers. The Fed, they watch the PPE, the Producer Price Index. A lot of economists and a lot of the world watches the Consumer Price Index. And it's funny because somebody made a comment on one of the videos last week saying, hey, Dan, does the CPI come into play here? And I didn't really respond because it should, but for some reason the Fed doesn't really give the CPI much relevance, but the other parts of the markets do. The other parts of the bond market, the other parts of stock markets, the other cryptocurrencies and everything else. So everybody else pays attention to the CPI. That's that number right here, and that also is a big gauge of where inflation is. And then the next day we have import prices. The import price index, where the dollar is going, and also that also gives us an idea where inflation is. Federal Chairman Powell is speaking again. He's speaking an awful lot, and that scares the bejesus out of me because if he says one wrong word, the markets will just completely turn. Okay, the markets aren't looking for any additional stimulus to make it go up higher, but what it's watching for is negative tones by the Fed, and that's what we don't want. And then Thursday we have initial jobless claims, retail sales, and some other numbers there that really shouldn't affect the markets. And then Friday is housing starts. That won't affect what's going on with mortgage rates. Those things will be affected through Tuesday, Wednesday, and Thursday. Okay, so that's what's coming up. But let's get a gauge on what's going on. MBSs are down 28. What's my assumption on this? Well, basically, again, there was no economic data coming in, but tomorrow we know the CPI is coming out. So the concern there is that number is going to be hot. I expect it to be hot. But that being said, I'll get to the economic calendar here in a second. I'll reiterate some of the information on there. But where were we today? Basically, we started the day right about here, 103.20. It actually is 103.19. And we opened the gate, we opened down right out of the gate. And it kind of tried to find some traction, reduced, found some traction, and so forth. So I think there's uncertainty here. This is good news. Look at the trend here. We got an upward trend. Again, guys, this is what's going on with the price of the mortgage-backed security. As the price goes up, rates come down. I like this end of the day trend. I like where we're also getting green candlesticks. Greens means there's more buyers than sellers. So I think a lot of people came out of the gate thinking today, you know what? Inflation numbers are going to come out today, and we're going to just kind of open the week and dump some of our mortgage-backed securities. So we had not a lot of purchases going on there, and then throughout the day, the people just reconciled their positions. Guys, this is a bond that trades on Wall Street. So when I talk like a trader, it's truly what's happening. When I say, people are selling, they're taking profits. Basically, a bond is you buy it in the hopes of making money just like a stock. And you can trade it. You can buy and sell it, within a day, within an hour, within a week, and either make or lose money. Okay, so that's what I mean by they're buying and selling and taking profits and so forth. So that's what we saw throughout the day, but I like the recovery right at the end of the day. This is a big number to bring back, but let's see where the chart is right here. We're going to go through the long-term or the last quarter's chart, and we had a little pullback. Okay, the nice thing is, and this is where a lot of technicals come into play. Okay, we have all these lines right here that we know that these are called Fibonacci levels. These are resistance levels. Okay, they're right here. They haven't really been playing a role lately because we're blowing right through the numbers and then blowing right past the numbers again. So what we're focusing on right now is kind of the micros. What's happening throughout the last 25, 50, and 100 days. You can see those right here. These are representative in these lines right here. The top line is the 100-day moving average. Then we got the 50-day moving average. Then we have the 25-day moving average. We have went over, we kept hitting the 25-day moving average, and then it caused resistance. Then we broke through it. What I don't like is we're going back down. However, this resistance line is playing a role. It didn't hit this, which is good news. So our trading range is going to be right between here. And if we extend this chart out, this is the 50-day moving average. If we extend that out, and I'll try my best to do this, the chart would go something like that, okay? However, here's where we've been trading, right through here. So we're not going to get there in a straight line. We'll have some profit taking here and there, but I still think we're going to hit the 103.5 mark, and right now we're trading at the 102.91. So we have substantial, I'm saying a 60 basis point move that I think we're going to get to in the next week or two. Okay, but it's not going to go like a straight line. So again, as this goes up, rates come down. So I don't see rates getting any worse and getting a little bit better. However, we don't know. This is an economy, and this is charting, and this is trading that we've never seen before with all the stimulus out there. The rates at its historic lows for a long time. There's a lot of things that we're not used to, and that's why we follow this on a tick by tick basis. However, if everything stays consistent, we should gradually increase and find an equilibrium right in this range here at 103.5. So my expectations are I'm not locking any of my clients. I'm watching this. However, if we see us hit this 25-day moving average and start out below that and close below that, that's going to show me a bearish sign, and I might start locking people in. Okay, so tomorrow I'm going to watch this meticulously and see where we are falling on the 25-day moving average chart, and that'll determine if we continue or we look to lock our clients or not. So the economic calendar. Tomorrow we're going to see the consumer price index. A lot of this stuff opens. You can see 7 a.m., 7:30 a.m., 7:30 a.m., 7:30 a.m. All this information gets digested and put out into the news before trading, before we even get our mortgage rates. So if this number comes in really hot, and all of a sudden the rates take a bump up, well, by the time we get our rate sheets that come in around 9 o'clock, it's already factored in. That adjustment's already factored in. However, I think we saw that adjustment today, expecting a little bit hot of a number. The number that's being expected is, let me see if I can get year-over-year consumer price index of 2.5. Okay, that's a consensus. If it blows out that number, and I'll say it again, guys, and I said this last Thursday coming into Friday, if we blow past this number and everything looks more heated than it should, let's say this number comes in at a 3 or a 4. I'm going to say it again. You're going to see the stock market crash and mortgage rates jump up. Again, I'm not fear-mongering, but that's in normal times when you're normally charting these things. When that information comes out as such, that's what you see. Okay, so what's going on with rates today? Well, I'm going to post right here the 30-year fixed, 15, 30-year jumbo, 30-year FHA, and the 5-year ARM. These are not my rates. These are rates out in the country. And this is best execution, meaning these are the best rates you can get. If your credit score is a little bit worse, your rate's going to be higher. If it's an investment property, your rate's going to be higher. If your loan amount is maybe under $100,000, you're probably going to have a higher rate. So this is basically the best possible rates you should be able to get without paying substantial points. Okay, so we're going to focus on the rate here and the points and the fees. So the 30-year fixed rate right now is 3.48 with points of 0.42. Okay, the 15 is 2.82 with points of 0.4. 30-year jumbo, 3.53 with points of 4.3. 30-year FHA, 3.47 with points of 4.1. And the 5-year ARM, 2.95 with points of 4.4. How do you calculate your points? Well, basically, it's fairly simple. Take this number as a percentage and multiply it by the loan amount. Easiest way to do this, a $100,000 loan with 0.42 in points would be $420. That's what it would cost you in points to get the 3.48 rate. So what I'm asking people to do is look at your mortgage statement. Where's your rate compared to these? Okay, that's the first thing. So if you're in a 30-year fixed and your rate is 4, 4.25, 4.5, let me know. I'd love to talk with you to try to get that down. However, here's what a lot of people are doing right now. They're back to work, but they lived on their savings for so long, and then they started using credit cards. Okay, if you have credit cards, look at those rates. If you have a sizable amount of credit card payments or debt, in the tune of $20,000, $30,000, $40,000, look at those rates. You don't be surprised if those rates come out to 18, 20, 25%, and you can play the transferring game as long as you can, transferring balances to 0% rates and so forth. But eventually, if and when it does catch you, you might want to look into consolidating everything into one payment and at a rate that's still at historic lows. So that's the rates for today. So I hope you like my videos. If you do, I ask you a couple things. Please give me a thumbs up. That helps the algorithms through YouTube, and it helps me be found easily or more easily on YouTube. Give me a thumbs up down below. Subscribe down below as well. That also helps the algorithm. And don't forget to smack that bell so every time I post a video, you get an alert. I hope you like my channel. Go to the rate update in YouTube. So it's the rate update with Dan Frio. You're going to find over 800 videos. We're closing in on 13,000 subscribers. So you might be able to, by subscribing tonight, peek me over the 13,000 mark. I'd love if we could hit that. But if you're like, Dan, I want to reach out to you guys, how do I do that? Okay, the first thing is go to therateupdate.com, scroll down below, and you're going to see an 800 number, 844-775-LOAN. That's 844-775-5626. Or scroll up just a little bit, you're going to see a calendar here that you can go in and pick a 15, 30, or 60-minute consultation. Click it. It'll find you available days and times. You can schedule through this, and then we will notify you via text, calls, and emails, and then we'll do these meetings either by Zoom or phone call. Or if you're in the process and you're like, Dan, my rate's 4.5 and I really need to get this done, just click the Apply Now button right here, the click here. If you want to use the mobile app, very cool system. You can basically do your entire mortgage almost through this app right here. Our desktop version is just as good. You can click here and you do it on the desktop. So that's the best way to proceed with a mortgage at this time. But I ask you this thing. If you're in the process of building, buying, or refinancing your mortgage, please let us know. We'd love to consult you through that entire process. Not knowing is the key, and that's the reason why I put this channel together is to educate you guys on how and what to do. Okay, if you're in a forbearance, that's an area where people are going to stick their head in the sand. They're going to pull it out, but if you don't act on the forbearance with your servicer, you might be in trouble. Because what they do is it's like a credit card. You ever apply for a credit card or a service and they're like, after 30 days, or you can cancel up to 30 days with no cost. And then after 30 days, it's like, oh boy, I just got hit a fee. Well, the mortgage forbearance process might be the same. Many servicers or mortgage companies are requesting that you reach out to them at the end of your forbearance to work out an agreement. If they don't hear from you, they're expecting you to send in a payment to get yourself caught up. So don't get looped into that, and potentially, and I'm not saying you will do this, but it could start a foreclosure process on you, and I don't want you in that position. So be proactive, not reactive. So God bless, guys. Thanks for watching, and I'll see you tomorrow, same time, same place. See you then. Bye-bye.